Good morning. Good morning, everyone. Special stream today because of the macroeconomics. Please let me know if the sound is okay in the chat before I start any further. All right, thanks. So as in the banner, I just want to look at some basic Bitcoin, the state of things, and some hedges I have been trading, because pre-market data in US looks pretty nasty, with the Nasdaq 1.89% down in the pre-market. Asia is down, Hong Kong even 2.7. Europe is deep in the red, and the invasion seems to be has begun, and obviously that will bring a big impact on the economical situation. So let's start with Bitcoin before we dive into other things. Yesterday was a banking holiday, President's Day in the US, so it was extended weekend. So this has all the things it needs to become like a red, black Monday, but then on Tuesday this time. So if we quickly take a look at Bitcoin for our chart, we see that we landed on this major support zone from pretty much earlier this month and a bit of January, and it's a very strong zone, but with the current macro, I have my doubts if it will hold. Normally I would be really confident in taking a long at this point, especially with a very solid harmonic entry on this level, but yeah, considering the macro, I'm not gonna take the chance. I'm still looking for short opportunities on that. Just taking a look, fixing the last glitch in the chart. So I have my doubts we will break out of this support zone, and breakdown is likely. If we go down, a double bottom at 33 is a very likely bounce point. That would mean from the current price about 11-12% drop, and I'll probably be stacking up, starting some low leverage long positions here for a long term, but it depends on the price action at that level. So I don't want to spend too much time in Bitcoin at the moment. I don't think we will get any moves until US market open or close to US market open, when the oh, the chart is not there, sorry. Just have to switch. There we go. So this is the support zone I've been talking about for the last minute with the wrong screen in the stream. Always, it's the first live stream I'm doing on this platform, so just have to find my way a bit more. So if we fall through, then 33k is the most likely scenario, but after that it's pretty fast 30,000, and don't even want to go below that. That would be very nasty below the 30k. At 30k, if that breaks, then there is really a really black swan event and things really escalated badly. But for now, let's focus on that 30 27k that we are at the moment, with the 30k, 33k being a very strong next support level. So if we quickly take a look at US dollar index, still stuck in the zone, waiting for things to happen. Stock markets, these are still Friday's prices, but if we look at, if you would have go to the pre-market, then you see a big gap down. I think, where is the SPX at the moment? 42.90. Yeah, that's right around here, so a big gap down. Obviously, if we break that low from the 24th of January, if you go below like 42.22, and if that continues, then we're in for a lot of pain. Yesterday I did my Monday market analysis for the Trade Mentor VIPs, went into detail on how far it can go. So if you remember, I advise you to watch it if you haven't been on the live stream, because there's a pretty clear picture and it's not looking good on that. Gold is having a nice run with a decade-long cup and handle playing out. And the indicators are slowing down my laptop here quite a bit. So that's still looking good. We'll take a look in detail in a bit. Yeah, my already famous Bitcoin chart, where I did a guesstimate of how the trajectory could go, unless we will get a really black swan event. You see, we backtesting that descending trend line now after breaking it in beginning of February. Normally, as I said, very solid bounce zone, but with the macro and the stock markets, we have to see. Bitcoin did react well on geopolitical tensions in the past, but it's hard to say what will happen at this point of time. Still, bottom of the channel, 33k-ish is the most likely scenario. I drew this somewhere in the end of January, so it aged pretty well so far. Obviously, when exactly the timeline is just completely a guess. This dip could easily be today or tomorrow, the dip to 33k, but these higher levels could take longer or not. It's just a guesstimate on how these markets usually react. So far, spot on. I'm not gonna go into details on altcoins and Bitcoins at the moment, because altcoins are getting destroyed mainly, and surprisingly there are not a huge amount of short positions opening on Bitfinex, so that's a bit surprising. Seems they're stacking up longs on these levels. Bit dangerous if you ask me. Chart wise, yes, definitely, but with the macro I have my serious doubts if that's a smart move at this current level. So that finishes that. So I've been hedging for a couple of weeks now, mainly USDT obviously, but I'm also trading a couple of tokenized stocks on FTX, so where you can just easy buy, sell, and it's a crypto tokenized version that follows the price of the official stocks. And these are the ones I've been hedging into. So we have the United States Oil Fund. You see that it has, this is the chart on the FTX. If we go to the official chart, that's obviously still closed. You see that we closed at 46.74, but the FTX is already at the 64, sorry, and it's already at 67. Very solid uptrend. It's just been kicking it. You see this complete fake out there, maybe just a chart glitch. I doubt that it's there in the official. Yeah, it's not really that bad. It was probably in a weekend. So let's just look at the official chart there on the daily. You see that in the COVID crash, this really took a plunge, and since then it's just going up and up and up. Uptrend is rock solid. You had a very decent correction there. By the looks, 886 or 618 somewhere. Yeah, almost the 886. Pretty close there. It double bottomed with a very distinctive higher low, and it's just been ripping. And it just does not seems to want to go any further down. If we look at the last moves, I'll take the completely last move after the last correction. We see that we hit the 0.5 in bullish conditions. That's usually the biggest retrace, the deepest retrace you get when it's really bullish. And we are now a very clear triangle-ish formation there. A bit of a descending triangle, but if we break above that, what we are doing at the moment, because in the pre-market data, you see we broke out already from the trend line, and we are making a much higher high already. Let's see in the past what potential targets are. You see there's a lot of upside potential there. It's most likely gonna fill this gap to like 69. That's the first target. So let's put some lines on there. We got a gap fill here at 68.8. Probably gonna see that today. And then we have this dip from December 18. That aligns pretty well. So this is a very strong resistance zone between these lines. But if we go above that 74, then I think there's nothing stopping it from getting much, much higher. And you see we are a long way from all-time highs there. From the current price to all-time highs, it's like 450% up. Don't think we'll see those levels, but we got a resistance zone right here. It's almost the $100 mark, and after that, this double top here, it's a very valid point. So targets for United States Oil Fund are 6%, 14%-ish, and after that probably gonna go up 50% from here. So very nice hedge, and I think oil will do. The price of oil is already shooting up, so it's logical that this oil fund will benefit from that too. Very nice hedge. Another hedge I'm looking into, or already scaling into, is the gold miners ETFs. You got two versions of that. You got the gold miners, the more older established companies, and you got the junior gold miners, the more newer startup well, kind of startup in for gold world senses. And they are in a pretty good position. See, they also went quite a bit down on the whole money printing and all the money going into the stock markets and crypto. But it's been recovering, bouncing from that critical 38, 37, 38 is shown. And it's trying to break out of this zone. If it does, the targets are pretty clear also. It aligns perfectly also with that bottom. 48 is the next target really for the junior miners. I just think 54 is the logical next level. Percentage wise, we are looking at about 10-11%, and can see a 25% potential upside there. Pretty much the same for the GDX itself. Bit different numbers, but they're like chart wise they're pretty much the same. One interesting thing I have been doing, I've been swapping between GDX and GDXJ. On FTX you can convert between those two without any fees, so you can just trade a few extra percentages between the two without leaving the hedge asset class. Like here on this bottom, when we broke out, I swapped from GDXJ to GDX. Was it 79? So that's just an extra, currently almost 2% profit without leaving the asset class, just by switching between GDX and GDXJ based on this chart. And you see we are entering the trend exhaustion line here on trend profit. We are still in the overbought territories in this comparison between the two. So if this goes down a bit or makes a double top formation, I will probably swap back to GDXJ to trade that pullback. I think it's a nice way to keep busy trading without exiting your hedge position. So if we make a bit of a double bottom from here, we might get a gap fill 0.74. Probably first make a double top. If that happens, it will probably go to the 618, so you can get another almost 2% gain just between swapping between the two. Very interesting, in my opinion, to trade the hedges. That was the junior miners. Just looking for the right screen because I think I skipped one. Oh, there we go, it was one further up. Another tokenized stock is the... No, that's not it. Where are you? Gold futures, silver, Pax Gold. Oh, I don't even have it on the chart there. It's loading a bit. Another tokenized stocks is the iShares Silver Trust. And if we look at the metals, you see silver is quite in a nice run up at the moment. But the Silver Trust is looking quite good. Let's see, it's 22.12. Let's see the tokenized stock there. see that it's gonna gap up open. It did have a bit of a wick here in the pre-market. From the daily perspective, so we are in a bit of a triangle. Something like here. As soon as we break it, that's why you see I got my alert on $23 there. If we break that and we confirm it with a bit of volume or confirming the trend line, then I think we could see a very nice leg up there. Let's see what the logical levels are in between there. 24-ish. We can still have that gap at 25-ish. It's also exactly the middle of this accumulation range. So those are the tradable targets short term, and from the current price, that's a solid 8 to 14% gain on the iSilver. If you've only been trading crypto, then you might have a feeling of very low profits. You're used to over leveraged trading crypto and altcoins. This is a different ball game, so percentages like this can take quite a long time, like maybe weeks to months to play out. We're looking at the daily chart here, so that could take a couple of months to get there. But if the chart looks good and at least getting like a couple of percent, 5 to 10% gains on a hedge is better than being in crypto that just has the potential to go down for another 15 to 20% in a few days. Obviously, when crypto bounces and it looks good, I'll be scaling out of my USDT. I'll probably leave the hedges for a while if they're in a good position. Put stop loss to break evens, trade them back to USDT, and iSilver looks very nice too. So just looking at gold itself, it's fighting that 1900 very strong resistance level. After 1900 we obviously have the 2K and the 22 of the 2100 as targets. Solid uptrend. It seems to have finally bottomed out on this very critical 1700-ish level where we had that double bottom here, confirmation low, and now since the confirmation low consecutively higher lows on that, and we now pushing the resistance. If 1900 goes, then the way to 2000 is pretty clear. So that would be, my laptop is getting really slow from the streaming, sorry about that. Another 5.5% upside potential to 10% on that peak. So gold looks good, and at least this is the futures chart obviously. Let's take a look at silver. It looks even better. Pretty much the same pattern, only the price swings can be a bit more volatile on silver if it really takes off. Obviously, if we go to the next real, it's 4%. $25 is about 4%. Next stop is around this level at 27. And you talk about 10. Then the next stop is probably the $29 with 20%. So the upside percentages for silver are a bit higher than for gold, in my opinion. One thing to watch, if you're in doubt between the silver and gold, you take the silver and gold ratio, which essentially says for 1 unit of gold you can buy at the moment 78.7 units of silver. So that means gold is 78 times more expensive than gold at the moment. This is kind of going sideways usually, but there could be very steep differences in the price. So we did see runs of gold compared to silver in the past in March 20, because silver is mainly used for industrial things, and gold is obviously a classic old-timers inflation hedge. Interesting chart to look at. Like I'm trading between GDX and GDXJ, you could swap between gold and silver futures, or get into gold or get out to gold based on this chart also. Is anything changing? Not really. See if there's any news updates. Nothing really yet. We'll just have to see how bad it gets close to market opening. Futures are recovering a bit, but they could, in the current situation, they could flip green just before market open, or they could plunge much further at market open. It's really hard to put any predictions on that. It's so geopolitically driven at the moment. All right. So I hope you are in a solid short, or you are hedging into USDT at the moment. I see a request in the chat. Euro USD, yes. Let's take a look. Where market is open and not delayed, so I'm on the right chart. So just going sideways, pretty much like the DXY chart is also showing. It's really waiting to see what happens. If the invasion goes through, you will probably see the dollar rise and the euro go down because of the European dependence on the Russian natural gas, and partially in oil. That market hyper divergence on the daily really played out really nicely here. We are exiting the oversold there, so it could be a hint that the euro will rise a bit, but it's like you see, it's sideways with fake out up, fake out down, correction, stabilizing again at exactly the same level, and it's been here since November 21. So I don't really see any trade opportunities either up or down. You could very well just draw a box around the price action. I think that's the most tradable thing you can do at the moment, and you just wait for it to break either to either side, not just a wick. What you want to see, where is my right tool? I always lose them when I'm live streaming, you guys know that by now probably. What you like to see is a break of this box, confirming the top of the box, and then bouncing with a decent volume in either direction. That's the price confirmation you're looking for, or the volume takes a really big spike when breaking out. If you see a pattern like this, then the entry point is above the initial the impulse up or the impulse down. you would take a short position from here, or you take a long position from there if you trade it. Let's just quickly look at targets there. To the upside, pretty much this level here is the first stop there. You have this is a very strong one, and obviously then you go into the higher territories. From the current price, those are quite big steps on Forex. On the other end, to the downside, I'm just gonna toss the volume out of the way. There's pretty much just as much downside opportunity there. It's so symmetrical, it's it's kind of crazy if you look at it like this. These are down targets. Let's see how that aligns historically. That's right the middle of this accumulation range with the double bottoms. So Euro USD, just wait, sit it out. It's no way to tell. We're in the middle of no man's land, and upside targets and downside targets are easily identifiable. So we're just waiting for breakout of this box with price confirmation, price volume confirmation on that one. Obviously you can trade lower time frames. There's a bit more scalping opportunity there, obviously. Like this divergence with the double bottom reaction was a very solid entry. The green stars on trend profit would have given you, let's see, end of the bar, some small scalping opportunities. Another green star there. So like on the 1 hour you could scalp 0.25, 0.65 moves probably. But yeah, those, you need to play with a lot of money to make any good money from that. 4 hour maybe, some more opportunities. Also looks okay-ish. So yeah, I won't be looking at this really until it goes out of this sideways zone which we've been in forever. Alright, let's I'm probably going to do a signal stream with maybe some comments when US markets open later today, just to see how things are progressing. US futures are recovering nicely. How's Asia doing? That's still pretty nasty. Europe is also recovering a bit, so we are getting a bit of a bounce, but let's see how that ends up. Alright, I think that's it for this morning. I'll make sure these recordings are posted somewhere available. Trade carefully today, and also Thursday we got some major news events on the financial markets, so keep an eye out for market open, and I think 5 o'clock 1700 hours CEST time zone, European time zone, are the potential market movers there. But the headlines will be the biggest market movers. Alright, thanks for watching and take care.